welcome to the first installment of Bitcoin Magazine Happy Hour. It's going to be a weekly news roundup with some of the Bitcoin Magazine crew. Today we've got Colin Harper with us.
I'm Christian CK Snarks on Twitter.
My name's Michael.
My name's Cassie, also Bitcoin Cass on Twitter.
Usually we will be filming these, but for proof of concept, first week we're just going to record. So what are we sipping on today, guys?
Starting off with Frost Crushable Ale.
I've been wanting to try this for a long time. Cassie's over there sipping on one of my favorite Kolsch's.
I've actually never had this before,
it's really
so I'm
good.
Excited.
Yeah, Mad Tree's a really good brewing company, and that's probably the best IPA outside of Beard Iris that you can get in Tennessee.
Oh,
Nobody cares what I want to drink, dude.
Yeah, wait, what is it? What are you drinking, bro?
Dude, the beer coiners might. If Zach Vole is listening, he definitely cares.
IPA.
Oh, that is pretty good.
Right.
Wait, cheers, everyone.
Yeah,
cheers, guys.
Hey,
Huddle on.
hey, to the moon, baby. All right, so what's on the agenda today, Colin?
So we're going to be going over a few topics. I think we'll start very briefly with Bakkt, because we released kind of a progress report for one of our first articles this week about what the trading volumes were compared to CME and CBOE when they first came out. I also would like for us to go over the Crypto Ratings Council news, Coinbase and all of those guys coming out with kind of a system for gauging how likely a coin is to be a security. And then I think we'll round it out with news about Block.one and also Saya Coin settling with the SEC. So, just to go right ahead with it, let's start with Bakkt. So not a very explosive first week for Bakkt. The first 24 hours only saw 71 contracts, which ended up being around about $700,000. And at the end of the week, we had only seen, I think, $5.8 million changing hands on Bakkt.
Damn.
So
did y'all expect that to be a lot more?
I mean, I think a lot of people did, right?
It seems pretty reasonable, though. I mean, for something that's just starting out, I feel like any exchange or anything where you're trying to get more volume or you want contracts on it, it's going to be small in the beginning.
Yeah, I think that's true. I think that was one of the takes that I saw on Twitter following, because there were a lot of snarky hot takes where people were like more institutional money coming, bro, and nothing happened.
That is the reason Bitcoin fell.
Yeah, exactly. Yeah. And
hey, every time futures have come out, the price has dumped
immediately
true. After.
Yeah, but but for CME and CBOE, actually in the article that I wrote about this, Edward Moya, he's this analyst for I think it's the Ananda Group. It's a legacy finance firm. But he basically said back in 2017, the correlation there is actually pretty strong because all of these traditional finance guys were just itching to short Bitcoin. And then CBOE opens on the 13th and CME opens on the 17th, or maybe that was flipped, of December. And then, Q bear market. But I think for Bakkt, right, you can't make that correlation because the volume was just so thin.
You know what news also came out right around that time?
What?
Trump's impeachment. We're getting
is that bad?
Here?
Is that bad news for Bitcoin?
Who knows?
I think that Trump is good for Bitcoin.
Trump doesn't like
Orange
Bitcoin,
coin go up.
Yeah, but he's also not paying attention at all.
That's pretty true. That's pretty great. Not to have political ignorance.
If Bitcoin went up when Trump was elected, then it's only fitting that it tanks when he gets possibly impeached.
But wait, turning it back to back, lol. Does anyone here know what the volumes were on CBOE and CME when it first started? Because I know that the volumes were garbage, and then recently people were making comparisons, comparing back volume to BitMEX volume and comparing back volume to CME volume.
We do have data
CME
for that.
is much, much higher.
We do have data for that. And actually, the first 24 hours of the CME's futures, which launched on the 17th of December 2018, the 18th of December 2017, were 100 million on the first day. And for the CBOE, which launched on the 12th of December 2017, were 73 million.
As compared to Bakkt?
Compared to Bakkt, which was a whole $700,000.
Oh, man.
So, that's a pretty sizable spread, right? And, I think there are a few variables at play. One of the threads that was hit on in this article, I talked to Suzu, among others. He was on Twitter talking about it a lot. His partner or founder of Three Arrows Capital. He basically said, look, institutional investors already have a lot of on-ramps to Bitcoin. Like people think they don't, but like between Grayscale, Fidelity, things like the CME and CBOE, Ledger X's call options, like there are a lot of Bitcoin investment vehicles and products for the Wall Street traders and for the Wall Street investors, right? So it's like they don't really need Bakkt. It's just kind of another drop in the bucket. And he was also of the mindset, and I am too, that it is too early to tell, right? And $5 million worth of volume in the first week, it's not good, but it's a start.
What's like been the average daily volume of Bitcoin in general this week, though?
That's a really good question.
Because I feel like in general, the volume is like lack of volume is kind of like why we're seeing the price drop. It's like we're not able to hold at those.
Yeah. Well, while you're looking up that data, I feel like it's a little different almost the way that Bakkt came out versus those other platforms in the sense that, like you said earlier, Colin, when those other platforms came out in 2017, it was like the way that Bitcoin investors or just investors in general could finally short Bitcoin. And I also feel like that's why the volume was so high, because people were sitting there all through 2017, 16, and Bitcoin keeps going up, and the opportunity to short is just more and more attractive. And so like as soon as it was available, there was like that immediate need because of where the price was. Here it's like, Bakkt is really, really awesome long term, but it's like it came out, and when it came out, the function that it provided kind of already existed, and Bitcoin's price wasn't really in a unique position to really like people didn't need Bakkt to capitalize on a certain opportunity that was already available. But on that note, I feel like Bakkt is kind of one of those things that is more. I would draw similarities to Lightning Network in the sense that it's infrastructure, it's there. It's really useful because we know what it's used for, and we know what it's going to do. Physical delivery is revolutionary for something like Bitcoin with a hard cap, but yeah, it's something that once people actually need it, its results will be proven.
Yeah, and I've been listening to a bunch of analysis about physical delivery versus cash settled, which is CME, CBOE are currently cash settled. With cash settled, it really leaves a door open for a lot of paper Bitcoin to essentially be traded, right? So they're trading Bitcoin, but Bitcoin doesn't have to be owned. They're really just trading contracts.
Yeah.
Now, once you have also physically settled Bitcoin futures like Bakkt, like Ledger X, that kind of keeps the paper products honest, because there's always going to be a spread between them, and if there's an arbitrage opportunity between the paper and the physically backed, people will, right? If it's cheaper to buy the paper and then go take that money and get physically settled Bitcoin futures on the other end, people will arb that until the other side is honest.
Yeah. Right, and that's something that's like really prominent in the gold market, and something that a lot of like Austrians will say is like, don't buy the spot paper, buy the spot specie, right? Like you want to make sure that you're getting hard asset, and that's an important distinction you said. For those that don't know, the CME and CBOE, which traded on the Chicago Mercantile Exchange and Chicago Board of Exchange, some of the largest stock exchanges in the world, they're settled in cash, and Bakkt's futures are actually settled in Bitcoin. So at the end of the day, like Christian said, people who are trading Bakkt are actually getting Bitcoin into their Bakkt accounts at the Bakkt warehouse. But to go back to what Cassie was asking earlier, Bitcoin's 24. This is on Masari. They don't have weekly volume unless they do. Oh, come on. They've got good data feeds.
I'm just a dick.
Yeah, you are a dick.
Bitcoin Magazine or bust.
Well, anyway, so they don't have a weekly transaction volume tick or counter, or if they do, I'm not seeing it and I'm incompetent. But right now, the reported 24-hour volume is 3.39 billion. So we could probably half that, say anywhere in the ballpark of like 1.5 billion, I think, in 24-hour volume. So I mean, you're looking at what, like 7 billion over the course of the week. So like volume is still like ticking, I think, doing pretty well. I'm of the mindset that this is just because most institutional investors just already have their route into Bitcoin, and a lot of the people that I talked to for this article, due to run hedge funds and things like that, were basically saying like those who are already in are in, and those who want to get in are either need more convincing or are waiting for the right, the regulatory approval to trade it for their clients, things like that. one thing I want to return to, and then I'll open back up to the table. I really liked Michael's comparison to Lightning Network, this idea of like you could build on Bakkt, because as people have said this week, like Bakkt is a lot more than just a futures platform, right? Conceivably in the future, Bakkt might open futures to retail investors, and they're also trying to devise a custody solution and a point of sale solution for merchants, which could be really exciting if you, like me, are really juiced by the idea of a Bitcoin circular economy.
Cool. What's the next subject?
All right, next subject is, the Crypto Ratings Council. So the news here, Coinbase and Kraken, Grayscale Investments, Anchorage Custody, let's see, who else? Gemini.
No Gemini.
Not Gemini. Bittrex, Poloniex, Circle, but they own Poloniex. They basically came out this week and published this thing called... or announced the formation of this thing called the Crypto Ratings Council. And what the Crypto Ratings Council is, it's basically all these companies coming together and creating a de facto self-regulatory organization to rate the likelihood that an asset will be considered a security by the SEC. So in their first ratings, just to give you guys an idea, like things like Bitcoin, Monero, DAI, Litecoin, and Ethereum, or sorry, not Ethereum, but Bitcoin, Monero, DAI, and Litecoin got a 1. Ethereum Zcash got a 2, so did like Agorland and Chainlink. Shout out to the linklets out there. And things like Loom Network, Hydra Hashgraph. Christian cannot believe that I said that.
Dude, this motherfucker has a Chainlink sticker on his laptop. It's almost as bad as walking around with that stupid Neo backpack, but...
Yeah. Hey, man, that was the first swag I ever got from a conference, right? It's free.
I wore a Decred shirt yesterday because it was free. So.
Right?
Oh, my God.
So much free swag.
Hey, there's a lot of people that need free shit that, don't care.
Come off it. Anyway, and so the highest rating they gave, they're not disclosing which projects they gave a 5, which is pretty interesting, which means those are the ones that are most vulnerable to be classified as a security by the United States Securities and Exchange Commission. But Maker DAO got a 4.5. So David Hoffman, if you're listening, your baby is at risk.
Skirt.
But so a lot of people, this is really controversial. A lot of people were like, why the fuck do you guys have what gives you the right to make these claims? Exactly.
Can I ask a question? How is this different from those ratings that came out a couple years ago? Yeah,
like
the
Weiss ratings.
How does this compare to that?
Well, okay, so like that's pretty good question, because like they're just as clowny. But like Weiss's ratings were
these are way less clowny. The Weiss ratings were like just made no fucking
I mean,
sense.
that's pretty fair. Yeah, so the Weiss crypto ratings were like actual investment ratings, like in the same way that companies will rate AAA mortgages, which are also a joke. But these are actually they're not evaluating whether or not it's a smart investment. They're just trying to create a guideline, like a rough guideline for saying, okay, this might be a security, this might not be.
Got you.
And yeah, so...
Who do you think this is intended for, mostly?
I mean, I think this is mainly just for, like...
Themselves?
Yeah, exactly. Like they're not gonna... I mean, I talked to the lawyer running this thing, who helped them draft the guidelines and, like, the rating system. And they basically said, like, yeah, we don't expect regulators to pay attention to this. Like, it's purely for exchanges and service providers to know whether or not they might be in hot water for playing with a certain asset. Which is really funny because half of the assets, or most of the assets they mentioned and have listed, like the exchanges on this crypto ratings council have already listed. Like Coinbase, for instance, has already listed like all of these except for, I think, Hedra, Hashgraph, Loom Network, Foam,
Loom is
Decentraland.
And I'm pretty... Yeah,
is Loom
Loom's in there.
Hashgraph is on
Not
Coinbase.
permission.
Is it really? Yeah, I mean, that's
It's
really...
literally, that's the strategy.
kind of what it was, yeah.
Just slap a fine on there, it'll be fine.
Yeah.
They got a lot of money. It doesn't matter.
Yeah, we're getting to that later.
And one of the... who was it I talked to? I talked to a securities lawyer, and he basically just said... I'll actually read the quote from the article, because it was pretty scathing.
Was it Preston?
No, it was this dude named Robert Cornish. He works with Stephen Paley. Is it Paley?
Mm-hmm.
Yeah, Stephen Paley at Anderson and Kill. He said a council, in quotes, of financial service industry participants making affirmative determinations on how and when federal and state securities and commodities laws apply to products in which they are transacting business is troubling on several levels, he said. The SEC and CFTC rules on the formation and approval of self-regulatory organizations, like FINRA, for example, are written so that applicants actually inform the regulatory bodies of steps they are taking to have punitive members operate within the bounds of the law. This seems to be more of an ad hoc declaratory judgment forum of a cartel without any judicial or regulatory oversight. So this dude just out here just like putting them on blast, right? Like, so for those of you wondering, like, yeah, this doesn't hold actually any weight. They don't have any regulatory say or oversight.
All right, here's my take. I gave everyone else a chance, but I mean, this is really like they're just trying to self-regulate. They're trying to show that everything is fine, that every asset they've listed is not a 5, like all this kind of stuff. They're just trying to play. And honestly, I'm completely fine with it because as we're going to discuss later on with EOS, like these government institutions and CFTC and SEC that's supposed to be protecting you are not protecting you, and they're utterly incompetent. And this kind of like, I don't know, like dancing around and trying to like appear to, you know, have your best interest of your clients and of the people, and trying to make sure that they're only exposed to good, not illegal investments. You know, it's just show, and they're really just trying to, you know, kind of put lipstick on a pig and make it seem like everything is okay, when really, you know, they're just playing the game, and, you know, they're just trying to make a buck, and they really do not give a shit about protecting people, which is fine, but it's just, you know, it's kind of just bullshit that there's these institutions around that are, you know, essentially, you know, They have the power to stop you from running your business, stop you from doing this, making it extremely difficult to fundraise. But at the same time, they're going to let an EOS just get away with, you know, raising $4 billion very illegally and maliciously.
You got something?
Well, I was going to just ask, I mean, all of you, Christian, does Bitcoin fix this?
I mean, Bitcoin making it really hard for governments to raise funds and continue to fund these stupid regulations. Yeah, that does fix it.
Bitcoin does literally fix this, everyone.
No, it doesn't. It doesn't fix this at all. Because the problem here is, like, there are no clear regulations. I mean, okay, that's actually controversial.
The problem here is that there's stupid agencies that can make unclear regulations because they have infinite funding.
I don't know. I mean, like, okay, but like Bitcoiners want it both ways. We want to shit on shitcoins, but then we also want to shit on regulators. The regulators are trying to make sure that people don't lose all their money gambling on shitcoins.
But they do a terrible job at it.
But so the problem with regulators. Well, the problem with regulators is the incentives. The incentives, like one of you just said, are not aligned the right way. Regulators make their money by doing things that don't necessarily leave everyone else better off. It's more like fees. It's like a fee-based kind of thing, where the more work they do or whatever, you can look at it like that's why they do the work they do. Bitcoin will make that so much more efficient because they won't have room to be able to, you know, have the position that they do, because just incentives economically will kind of price those kind of people out of it. There's no need.
Y'all can go ahead and at me on Twitter, but Bitcoin doesn't fix everything. Fixes some things, but it doesn't fix everything. Pierre Richard, if you're listening, please at me. I love you, man. I actually have a lot of comments for what you just said, but I think
let's get at it. No, let's get at it.
Well, I mean, like, so the thing is, like, so there are two sides to this, right? There's this idea that the SEC has said, you know, the Howey test. For those of you who don't know, the Howey test is a theoretical test that you can use. It's like a yes or no kind of questionnaire thing.
Just one quick comment about the Howey test. I've asked a couple of like recently graduated securities lawyers about the Howey test, and they had never heard of it. So like that's to show how far it really goes, and like what they're teaching you in the classroom out of the textbook, and like how practical and realistic it is to actually use something like that in real life. And it's gotten a lot more like.
Let's break down what the Howey test is.
So the Howey test is this test that is defined in the 1933 Securities Act, which basically is the foundation of all securities law in the United States. And what the Howey's test basically says is security can be defined as an asset. This is like totally just like watered down surface level explanation. But it basically says if a centralized entity issues an investment and the people who are buying that investment think that they are buying equity in something that will eventually appreciate, then that's probably a security, right?
Appreciate based on the salesperson's work.
Yeah,
right?
but appreciate based on the performance of the company issuing the asset, right? So this is why, for instance, and it's complicated because William Hinman, who is, I can't remember what title he holds at the SEC, but he's one of the big guys. And he basically said last year that Ethereum's ICO was a security sale, but now that Ethereum has sufficiently decentralized, that's what he said, I'm not saying that, is since it's done that, it's no longer a security. And so, there's two sides of this, right? People say that the Howey test exists and tokens should just fucking register with the SEC. But there's kind of what Cassie said too, where like this is a pretty like arcane and like frankly archaic way of deeming whether or not something should be considered a security. And also the SEC is kind of flip-flopped on like what it's going, like it's been very, as Nick Carter said on Twitter today, it's been extremely mercurial on what it deems a security and what it doesn't.
Wait, so is something deemed not a security if the creators of said security or not a security hop on a panel together and basically collectively agree that they never thought that Ethereum would scale?
Are you talking about
I'm talking
ethereal,
about
like
Vitalik and Joe Lubin are on the same panel there, and Vitalik is sitting there nodding his head, and Joe goes, "Yeah, we knew Ethereum would never scale," and Vitalik's like, "Yes, exactly."
What is that? Just a gotcha kind of thing? What's your question?
I was making a pun. I was making a joke.
More rhetorical, yeah.
Yeah, it was very rhetorical. I'm confused. Like, but on a serious note, this like gray line in the Howey test area is kind of interesting because it's like the I guess I could also ask it in a different way, which is that if you knew from the beginning, or I mean, this obviously they didn't know, we're assuming, but if the original asset isn't meant to like be the final pathway to success, then how exactly do you regulate and judge the future versions of said asset, even if they're like Ethereum 2.0 is a brand new coin and that will have its own price, right? So how do you regulate that if, depending on how you choose what Ethereum 1.0 was?
Wait, is it going to be a new coin?
Yeah,
so,
Beacon ETH. You have to trade your ETH for Beacon ETH.
So
wait, really?
There will be a period in time where there's going to be two different versions of ETH floating around. I mean, they're already ETH Classic and stuff, but specifically on this.
That just shows how far removed. Like, ever since I started working at Bitcoin Magazine, I just, like, don't follow any other coin anymore. I used to do it, like, all the time.
You're not
ETH
wrong.
is a shit coin. Moving on.
Okay, I don't know if I don't know if it's shit coin.
What's the next subject?
All right, so actually it would have been really good because Christian nodded to EOS. I've heard so many different ones. I call it EOS.
Bullshit.
Yes.
But he alluded to
Shitcoin number 2.
when he was giving his hot take. When he was giving, hey yo, grab me another one. I'm gonna try to pound this. I don't want that. I want a pilsner. Yeah, grab me.
Beggars can't be choosers, man.
All right, beer break.
So Kristen was talking in his analysis about EOS settling with the SEC for running a $4 billion security sale, a security token sale. Would have been a good transition back then. We're going to do it now. That's the next thing we're coming up with. The big news this week that Block.one settled with the SEC for $24 million for running an allegedly $4 billion token sale. As Larry Cermak pointed out at the Block, this is 0.6% of the funds they raised from a year-long ICO. Y'all, like, that's fucking wild.
I will. So I'll start with this right off the bat. I'm going to credit someone else on Twitter. I forgot who. It was probably like Loomdart or something. But somebody asked on Twitter, what exactly do you expect? Like, if you're surprised by this short, small, minimal fine, what did you think the right amount was supposed to be? Because we haven't seen this before. What exactly are you surprised by, and what were you expecting?
If it was illegal, the right amount is forfeit all your money and you're going to fucking jail.
I mean, it's pretty.
That would be the right way to take him down, right?
That or like standardization of the way that they're fining these companies, right? Like what exactly backs up the amount that they chose to fine them? Like, is it a percentage? Clearly, it's not because. But
I mean, Siacoin settled. I mean, that's a different case.
Yeah, didn't Siacoin settle for 150% of their raise?
I thought it was 0.
Yeah, I haven't. So I'm like looking into this right now.
My understanding was that Siacoin settled for nothing because the SEC and them talked or something.
So as a part of Siacoin settlement, this is from Steven Zeng at the Block.
Ew, God.
What? Just
everything not Bitcoin magazine gets an ew from me.
Okay, well, I for one support fellow journalists,
especially the Block.
Block the Block.
As part of the settlement, Steven writes, Nebulous, that's the company behind Siacoin, has agreed to pay penalties and disgorgement of approximately $225,000. So Siacoin also seems to have gotten off pretty okay. I think Steven is using disgorgement right here, but disgorgement usually relates to relinquishing money. So in this case, that would be relinquishing assets directly related to the sale, right? So when EOS settled, there was no disgorgement or no rescission order that would say that they had to actually pay back token buyers. If we're talking about magnitude, EOS got away like a fucking bandit in this. And not only did they get away like a bandit, but so not only do they not pay that much, in my opinion,
nothing.
But they also, last point,
drop
Cass,
in the bucket.
But they also have the ability going forward to issue securities tokens based on exemptions by through rules in the Securities and Exchange Act. I think it's Rule A and Rule D. So going forward, they can still sell securities tokens to accredited investors if they want to
on the EOS platform.
Yes, and this is important for their voice social media thing. Which, by the way, funny observation, they paid more for the voice.com domain, $30 million, than they did in the actual settlement, which is crazy. But you were...
So, Siacoin, though, had two raises, right? One in 2015 and one in 2018 or 2017. And only one of them was technically fined.
Oh, interesting.
So, one was, okay because of some very, pedantic, loophole. And the other... I don't know. It all seems just very wishy-washy to me.
Yeah,
none of it really makes sense. None of it is backed in any sort of here's the foundation upon which we're going to be finding people, and these are the rules, and then it's just kind of slapping.
It's very scattershot for sure.
Yeah. So this is something I've been saying for a long time. All of these tokens, ICOs, whatever. They're essentially attacks on regulators, right? And they are exposing regulators in an extremely high volume way to essentially all the flaws in the regulation, right? So these regulations are not scalable whatsoever, and they're not enforceable whatsoever. And the hydra of shit that emerged in 2017 is really, really exposing that, right? It's exposing how corrupt the government is, how inconsistent this enforcement action is, and how easy it is to hire the right lawyers and get around it. And to be honest, it's all fucking bullish as hell for Bitcoin, because all of these people are just so busy trying to handle the hydra of shit, and Bitcoin is just chugging along.
That's pretty true. That's a good point.
No one's touching Bitcoin. No one's thinking about Bitcoin. Bitcoin is honestly the great example. Not a security, it's hard money. Everyone's man, this is...
I'm going to put you in an orange cheerleader outfit.
Dude, I'm cheerleading, baby. Let's go Bitcoin.
But back to Christian's point there, I think another thing...
I'm literally wearing a Bitcoin shirt.
I know you are.
Yeah, 3 days in a row, too.
One of the things... Well, it's actually yellow, so is that Bitcoin SV, bro?
Get the fuck out.
They were off-brand t-shirts.
Get the fuck out.
Oh my god. So
Cassie made these, okay?
Yeah, so
no, I didn't.
For context, guys, this is a throwback Bitcoin magazine shirt, and it's got a yellow hue to it. These were printed back in 2014 though, or 2015.
Those were printed in 2019 in January of this year.
Yeah.
They're fresh off the print.
I'm still pissed that I didn't get one.
You can't get one.
I'm pissed off.
Never.
We got matching shirts for a conference.
Well,
it looks real cute.
So back to the Block.one thing. One of the things I think it's also kind of exposing is not just the failure of regulators, but the fact that I talked to Hester Peirce, crypto mom from the SEC, about this a while ago for an article that we published in 2018. But Congress needs to get on its shit and create some sort of framework and do something to create legislation that will define Bitcoin and cryptocurrencies as a unique asset class.
Disagree.
But you look at the congressional hearing, look at how long that was, and by the end of it, do you think that anyone understood what they were talking about?
No, but at least it opened the door for conversation, I guess. But
I'd agree.
And like I also think sure, they don't understand it, but they don't have to understand it. They can get a task force of industry professionals in the same way that they would have Meltem and Jeremy Allaire serving on the panel for those meetings, right? Or for those testimonies. That's what they need. They need something like that. But Christian apparently disagrees with me that we don't need Bitcoin or the 1933.
The last thing we need is for the U.S. government to get together and decide what the definitions of shit is.
Well,
what is much better is for confusion to continue to ensue.
So there is resistance and then there's pragmatism, right? And eventually the United States government is going to come together and rule something about cryptocurrencies.
And hopefully a shitload of senators own a shitload of Bitcoin at that point.
I mean, they probably will, God willing.
So let's just let it go. We don't need to rush on any of these actions. That only helps token chills.
What were you saying?
Not necessarily. I mean, so think about Lightning Network, for example. Because every time you sell Bitcoin, it's a taxable event. The Lightning Network can never be successful until there's clarity on regulation there, right? So we do need some sort of clarity.
Yeah. See, that's a good point. And that's definitely. I think that's up.
The Lightning Network won't be successful until Bitcoin stops going up. Not because of the government.
All y'all fools making fun of people for wanting to spend Bitcoin too. Just hold your coins, bro. It's why everyone always.
No, it's just macro incentives.
Yeah, it's not even about making mocking someone that chooses to, but it's more well, dude, if you've been in Bitcoin, or you don't even have to be in Bitcoin long enough. You've just seen the price history and realize that it 10 to 20 X's every 2-3 years. Common sense should not make you want to not spend Bitcoin. So if you choose to spend Bitcoin and you know all those things, the fact that your $20 in Bitcoin today will be worth even just $100 still. Why would you spend it if you choose to? That's
maybe I want to have fun feeding the chickens,
Yeah, that's fine. And you know what? The thing is, it's totally fine. But in 10 years, you might be the one looking at how many sats you spent to feed the chickens and been like, fuck. So the reality is not because of government. Again, the taxable event thing is a hindrance, but that's only in the U.S. People are not spending Bitcoin globally because of macroeconomic conditions.
Yeah, there's a handful of Bitcoiners out there with $20,000 Xboxes because they decided to.
Or that pizza. What about that pizza?
Dude, Laszlo's having a good time though. If you guys saw,
dude, Laszlo's a boss.
Yeah, if you saw
Respect.
So for anyone who doesn't know, Laszlo, I'm gonna butcher his last name.
Hanyets.
Sorry, Laszlo. But anyway, so this dude is the pizza guy. He spent $10,000 on the first
10,000
recorded 10,000 Bitcoin. Sorry. 10,000 Bitcoin on a pizza in 2011 or 2010. It was the first ever recorded Bitcoin purchase. He actually did it 10 more times over the course of the year too. But if you saw the 60-minute interview, dude lives in a really nice house in Florida. He also invented GPU mining. Yeah, I think Homeboy's doing great.
Yeah,
Homeboy's having a good time.
The dude probably has, several digit percentage of the Bitcoin network. So I think he's just PG.
Nobody has.
Yeah.
Anyway, I want to ground it back to this Block.one news really quickly because one of the things that I thought was really interesting that came out of this is this idea. Okay, so what happens, right? EOS settles for $24 million after it raised $4 billion, allegedly, people say, but it probably did. And one of the takes was, well, the SEC basically just signaled to people, hey, run your ICO, and then post factum, you could just pay for it and settle with us later. I don't think that that's true. Stephen Paley wrote a really good op-ed about it, and he basically said, anyone who says that doesn't know what they're talking about because this was a one-off thing for EOS, a very powerful organization, also hired really great lawyers. But I just kind of wanted to open that up for discussion, see what y'all think about that.
Bullish for Tether. That's all I have to say.
What? Wait, no. Expound. What do you mean?
The organization behind EOS also backs Tether.
Wait, what?
They're together. Block.one, Tether, Bitfinex, iFinex, they're all in a cabal together. Bullish for Tether.
I don't know if that's bullish, dude. That just shows a cartel of very powerful interests.
So I mean,
the crypto market.
if you think that the U.S. is going to take down Bitcoin, they can't even fucking take down EOS
or Tether. What's the next subject?
No, that's it. What's your take?
What's my take? Dude, I mean, it's just the overall situation just shows that there's a lack of clarity, and I just think it's all, it's crazy because at the end of the day, we're all just, why are we interested? Why are we involved? It's because we have skin in the game in this industry somehow or some way, whether that's Bitcoin, hopefully, or just anything, even like, your career, if you're someone that works in the space. So it's just fun to watch all this play out, and there's really I don't have any opinions on it.
History being written before our very eyes.
I'll let them form the opinions 100 years from now.
I feel like when you're buying goodwill with the government, money is power, and they got a shit ton of money. So
yeah, they do. And if you read if you want to make sense of the waiver for the settlement that EOS signed, and also just the parameters of the settlement, Catherine Wu, as ever, has a really good annotated version on it. I would definitely recommend reading that. Also, I know we allotted these 3 stories, but I want to talk about just one more thing really quickly.
Yeah, we got time.
If y'all have been paying attention in the news, you know that Hong Kong is going through some growing pains right now. A lot of protests. Something like 2 million Hong Kong residents have on any given day have come out and have protest this. It's basically an agreement with the Chinese government, an extradition agreement where political prisoners or people, enemies of the state, as what they would say, can be extradited from Hong Kong to mainland China. But in light of all this stuff, local Bitcoin's volume in Hong Kong hit an all-time high recently. And I think that's fascinating because that is stress testing Bitcoin's adoption in a place where arguably Bitcoin is already probably pretty popular like it is in America, in the United States, I should say, and in parts of Europe. But it mimics what we've seen in other places of socio-economic and political duress like Venezuela, Iran, Colombia, Russia. Yeah, so just kind of wanted to throw that out there as kind of a rounding out thing.
The only thing I'll add to that is I think it's when we talk about seeing high Bitcoin volumes in places of socioeconomic distress that are more third world country as opposed to somewhere like Hong Kong, I think it's important to understand yes, Bitcoin is really helpful in places like Venezuela and Colombia and Argentina, but for the majority of the population, especially right now in Venezuela, they just want something to eat and they don't have power, they don't have access to Wi-Fi. So
it's still a privilege.
Yeah, it's still a privilege, absolutely.
Yeah.
Shout out to a Rhythm Trader who said that last month protesters called for a run on the Chinese banks, and it seems like with this news we're talking about right now, it seems that they're taking it one step further by opting out of the entire system.
Respect. What's your take, CK?
Yeah, I just think it's super, super interesting to keep seeing this narrative be re-proven out. And Hong Kong is very much a first world city and city-state, whatever you want to classify it. So we've seen this in the third world where their fiat is garbage and where you can kind of expect Bitcoin to be the best option. But here we are, Hong Kong, one of the banking centers of the entire world, with extremely powerful currency, with the established business sector. And here we go. Bitcoin is plan B. Bitcoin is where people are actually turning to when they need it.
Absolutely, man. And, it's let's just wait and see when we get those kind of volumes in the U.S. I mean, we already have, pretty strong investor scene into Bitcoin. But...
Yeah, the Americans are stacking sats, but in the words of Matt Odell, safety in Satoshis.
And stay humble, stack sats, everybody. All right, guys. Well, I think that rounds out our first week of Bitcoin Magazine Happy Hour.
Cassie, where can people find you?
Bitcoin Cass on Twitter.
I'm on Twitter, too. Last name, Tyberg, Taiberg.
And the Bitcoin Magazine unboxing videos as well. Michael's an up-and-coming star, baby.
Product reviews. Stay tuned.
Where can they find you, Christian?
Yeah, at CK_Snarks and my podcast at POV CryptoPod. It's the Bitcoin vs. Ethereum podcast.
And you can find me at As I Lay Hodling or As I Lay Hodling, depending on how you pronounce it. And you can also just find me by searching my name, ColinHarper. But anyway, thanks guys for tuning in to the pilot episode. Keep your eyes and ears peeled for next week, and have a good weekend.
Just ears.
No, I want them to peel their eyes too.
Hey,
cheers, fellow
Cheers, guys.
Let's go.